And welcome to Crash and Rally City, because that's what we've got here. Lots changed since we came on last time. The S&P rally continued to rally, and now we finally made a peak. Is it the top? Is the top in? Or did we make a low? So that's what we're going to do. We're going to bring in Rich from Handel Stats. Rich, how you doing?
Doing okay, Danny. Thank you for having me on today.
No problem. So anyways, we've pretty crazy markets, right?
Very crazy. It broke a lot harder. I expected to break, but not till next month. And we actually there's a guy that's kind of helping in my room now, Bruce, and he has been talking about the yen carry trade for like a week. Saying how it's being unwound, and he gave me a chart. Actually, he put a chart up in the room this morning, showing the carry trade. Well, we can look at that chart in a little while.
Yeah.
So and it kind of hit a level where it found some support, but besides that, I saw I look at Ichimoku charting and charts, and then I keep my levels, my standard deviation levels, and I have some time fractal levels that I watch, and we were coming down to all of them, and the way it was set up, I said if we break down and then rally back, and at a certain time, if we made a certain level back at a certain time, that the low was in, and it worked. It was like picture perfect as to how I painted this scenario pre-opening this morning.
Yeah.
And
well, here, hold on. Before you jump in, let's talk a little bit about what's been going on as far as these moves. Then we'll go into the kind of what you did today, which I think is just completely impressive. And I told you several times, unbelievable what you did today. But we haven't seen any markets like this in a while.
Long time.
I mean, I don't even know when the last 5% correction was.
Well, not only that, these are the biggest moves that, on any given day, these are the biggest moves we've had in July. So, I keep track way back to 1970, but on the daily stats, I only go back to 2008 right now. I'm watching those, and these are absolutely the biggest moves we've ever had in July, period.
Yeah.
In the last, 16 years.
But
so,
you were in the S&P pit in 87 when Tudor, were you in there in 87? No,
I was clerking in 87.
Okay, well then you saw Tudor selling every day before the crash, right?
Oh, exactly.
Yeah, I mean, and we knew kind of going, and I've been writing in the opening print for the last 2 or 3 weeks. Every time I say, hey, I think you got to buy the pullbacks, keep buying the pullbacks. But then after that, I would put in, hey, from July 31st, the S&P has rallied this many points. From June 14th, this is, because everything had gotten so stretched out. We all knew it was stretched out.
Right.
But, this is good stuff. I mean, great stuff for trading. But anyways, let's talk about your algo a little bit.
Well, I've got a lot of algos that I'm working on, and some of them I'm eventually I'm hoping to have it, a block up in the room where people can just watch it. I watch them on my screen up here, and I'm still working on programming them and automating them. I have part of the automation done for my morning gap algo, although I've had to reprogram that. I've had a lot of things that I've added. I have a kid working for me this summer, doing some Python to automate some of the stuff, and it's a lot more involved than I thought it would be. But anyway, we're getting very close, and the algos get more involved all the time. I have, like on my morning gap program, I have 140 different things that I look at that feed into that gap program. And I've got like a similar number of things that, filter into like my, what I'm going to call my shorter term day gap algo. And so it's a lot of programming, and it's I sometimes I run into like hard spots where it takes me a while to figure out things. Like I was stumbling on something for the last 3 days, and I finally figured out how to do it. And it has to do with timing, because I'm looking at market moves on a daily basis, on a cumulative daily basis for every month, going back to 2008, and then annually, I look at all the cumulative daily changes, and I'm going to, like with that program, I'm going to look and see how much the market pulls back. Like when we have a pull, a move like this down, how many days it lasts, how far it goes, how much it pulls back before it continues on or reverses. And because I've got all that data now, and it was kind of hard to figure out how to put it together, and I'm still working on that.
Well, I mean, I think that I've been watching you for 2 years, Rich.
Yeah, it's been a while.
No, it's not the time. Well, the S&P is 28, 29.
Wow.
It's not. It's not the amount of time that we've known each other that I've been watching this develop. It's really what's developed over that period of time.
Yeah.
It really is. And you made a spectacular call in the beginning of the year about the S&P going to 5,700, and we got to 5,721. You couldn't have hit that thing any better than anybody that I've ever heard of in my life. Now, today, I'd like you just to kind of quickly go over what transpired today in your room, on Twitter, and the calls that you made.
Well, first of all, as I say, I was because I look at Ichimoku and I look at how the elements of Ichimoku interact. I knew that if we made a lower low, and I had some support levels down there, and then it turned around and reversed real hard, it would produce a bullish cross, which it did. And if I could show my charts, I'll show you a couple things. Here we go. We're looking at this chart, and I'm looking at. I have, because I use standard deviation levels that I come up with. Here's my standard deviation. Here's my settlement from the other day. We opened down a little lower, but you see I have these gold levels are time fractal levels, and this is an old time fractal level. We went through the one standard deviation and down to here, and it hit this to almost the tick perfectly before it reversed. And then because this bar right here ended at 11 o'clock, the close over this level right here absolutely targeted this 55.16 area, which it kind of blew through. But I actually told people in the room, I was anticipating this. I gave a spread out, which is now, I said you could buy it at 9. It actually went down to 5.5, an SPX spread. Now it's trading $24. So you took a little heat, but it was a 40-point spread, so it could still make some pretty good money. Anyway, this is, I actually put this on based on some of the levels that I've been working with. I said, we've got to retake this level here over the next couple of days. I said that this morning, pre-opening, I have I go over the markets every day. And this was my retake level. If we close above here today, we're gonna target. I had this as a low target, and now that's probably, if closing up in here is gonna target back up in here someplace. So I think this whole thing could be a big reversal right here, right now. But it depends on how we close. We got to close above this level right here. In the NASDAQ, which has been really weak, comparatively speaking, for the last several weeks, actually, it is still kind of lagging right here. I had targeting this 1 SD level, which I still think it could or should go up here today. If this fails to get up here, it's going to put be a hard thing to have the S&P do all the work to pull this back up. But if we can get it back above this and then this level, and here's a level I put on the other day prior to, I put this on a couple days ago, or that I said that this has got to hold. Well, there's yesterday's opening, that 6 o'clock opening on Globex. It just gapped open lower. So, and it fell below there. And that was like the end of what was going on. And I will say, I didn't think it was going to break as hard as it did, when it did, although, as I say, Bruce, had been kind of indicating that he thought this market was, had a big headwind. But anyway, looking forward, this NASDAQ broke down almost to the tick. This low was 18,883 and a quarter. And my standard deviation level was 18,887.31. Well, I mean, you can't get much. I mean, a few points in the NASDAQ. I mean, that's pretty spot on. And that's exactly where it went. Here's a weekly 2SD level below. The NASDAQ still didn't react as strong as I wanted to like off that low, but it followed through the next couple hours, and now we're here. And I think if we can get above here, maybe even above here today, it will make a difference. Certainly above this 1SD level will target this, and that would be good. If we were to close above here, I think it's all the way back up to the highs right now. Not to say we can't go back down next month, but I'm along with I have Howard and Bruce are in the room, and they've been doing, both of them have been on the floor experience for 40, 50 years. I mean, so between the three of us, we have over 120 years of experience. If I throw you in there, Danny, it's we got a lot of experience, from a floor perspective and a market perspective between all of us. And I think we're kind of putting things together, and I think we have a lot to offer, and it's getting to offer a little more all the time. I was talking about that yen carry trade. Let me throw that chart up real quick. This was compliments of Bruce this morning. He brought this into the room, just showing. Here was the S&P futures, and here was from last November. You can see that the yen dollar was up here, and as it went up, the market went up, and then the trade was getting unwound. We broke here. Here's support. If this turns a little bit, the market should, hold here for a while, at least until something else transpires to take it back down. And seasonally, July is the best month of the third quarter. So I'm hoping that we close a little better there in July. Here's this is NDX. And I had put this on the other day. A 10% pullback would be down here. Let me look at my ES chart, because I can look there and see. Keep these cash charts up. We're back positive now, because here the June close was 460.48. We're back positive for July now. This total move down, that was old. I think I redid that this morning, and the total move down this morning was to the low was from the high 4.92%, and the NASDAQ, it was 9.52% from the all-time high to the low. So
the bounces actually made sense, right? I mean,
it makes sense. I mean, we almost went 10%. And by the way, here's another interesting thing. Last year in July, we made a high, and it trended down from July through August and September and October, where it hit that low in October. And that's where, once it turned there, and I did call that turn, I was very bullish. I said it was going to 5,100 by, February for sure. And, that's pretty much what it did. I was even astounded by this rally never really pulled back anywhere until the April pullback, and that was like a 6% pullback right there, almost 5.91%. But 10% here, and the NAS, we didn't do 10% now. We did half that, which was one of these. And not to say we can't do something more in the future here, but the NAS last year did pretty much the same thing. Where is this? It did an 11.75% pullback, and then up, and you can see we had an 8% pullback there, and here we had a 9% pullback. So the NAS obviously had a couple of larger pullbacks than the S&Ps, and basically because it's 6 stocks that are like 60% of the index now. So
Right. I mean, I agree with what Bruce was saying about the yen, but I think that there was a lot of things that collided yesterday. I mean, there really was. I mean, Deutsche Bank reported negative earnings for the first time in 4 years, and then they had that. Then they put out something about China buying like expensive goods out of Europe,
Europe, yeah,
Louis
Howard,
Vuitton.
yeah.
Yeah, I mean everything kind of collided yesterday. But
Yeah.
anyways, listen, let's do this. We came right down to our exactly what we said. 20 minutes. Now, were you gonna make an offer here real quick?
I think so, and I think Marlon put up a link, and we said we give like the first 40 people that signed up like a week access. Is that what?
Yeah.
Marlon said he can take care of that, so I don't have to like fumble doing that. But if you guys, and he's got a link. Marlon will provide a link if you guys sign up. You want to trial for a little bit, check it out, come in the room, see what we do, and. We're always working on making things, better. I am never going to be done doing what I'm doing. It's always going to be a work in progress. But
I know it is. I know
it's definitely better than it was a year ago, and better than it was 2 years ago, and it's going to be better than it is in the next year.
Absolutely. I think it's improving monthly, to tell you the truth.
Well,
and I will say one thing before we go. I'll say one thing. I listen to you. I mean, I try to pull out keywords that when you're talking about the markets, and I mean, you, not to say that you talk a lot. I'm not saying that. You put a lot of information out there. So for me, when I get that information overload, what it drills down to is it drills down to the meat and potatoes of what you're saying. And I think you've done great. I mean, I really do. I mean, and today, if there was ever an example of you reading your algorithm correctly, it was today. Would you say that?
Well, I've had a few actually in the last couple of weeks because I'm getting better at it. But today was good. But I think in the next.
I mean, they sold off like 40 handles and then they reversed almost 100.
And when you it's a powerful setup, and I think if we can close really well today, and it's given some up now. If we can close well today, I think the next couple of days are going to definitely be to the upside.
Yeah.
So
we've had a little bit of a little dumpster here, but we've had a couple and they recovered each time. So
well, and then
definitely different price action. But let's leave it like this. We can go off camera, leave the invite down there, and look at if there was ever a good offer. I like I said, I've got my own forum, and I can't sit in his room all day, but I will say that I do listen sometimes in the morning. I kind of zap in there right before the open, and he's already kind of done it, and I can ask a quick question and he bangs it out. And I don't know. It's just getting better and better, Rich. So let's leave it like that. Thanks for coming in, everybody. We were going to keep it to 20 minutes, and we're at 22 minutes right now.
Thanks, Danny.
You got it.
Everybody. Thanks for coming.
Thanks.